On the trade of the day, euro dollar seems to be forming a head and shoulders pattern on the 4-hourly chart. Formed the left shoulder and the head as long as the currency does not break below the neckline of 113.85, which you can see quite clearly on the chart. The Yellen speeches will likely still have an effect on the currency, with the dollar weakening across the board. Interest rate differential will still likely play an important part later on when the Fed continues to tighten. Sell the euro dollar above 114.30, stop loss at 114.70. Take profit at 113.40, risk to reward ratio at 2.25. So that trade really betting on a break of recent support. Depends on the Yellen, really, doesn't it? Whether we break down there, whether the dollar can strengthen.
Yeah, well, what I think needed to happen was for Yellen to reiterate the most recent rhetoric coming out of the Fed was soft inflation that we've seen thus far this year is transitory. We still, we adhere to our dot plot. We adhere to our plan to shrink the balance sheet. But as I said yesterday, she became very, very wobbly, and the market's smelling blood. I mean, it hasn't believed that dot plot quite consistently. Yes, it looks, a reasonably even chance they'll deliver on 3 rate hikes next year. But in terms of the medium-term monetary trajectory overall, market flatly disbelieves them. And as I said, Yellen's looking wobbly. And also, I'd mentioned that Yellen's probably going to be gone by February next year from the Fed as well. And the question then is who replaces her, who replaces the 3 already empty seats on the FOMC governing board. There's some very, very big questions as to what kind of Fed we're actually going to be asked to deal with and interpret going into 2018.
Just slash my wrist on that note. I feel very, very sad for these people.
Keep us all in commentary jobs, won't it?
Yes, exactly. Mike Ingram, Strategist at BGC Partners, thank you very much. And that's it for FX Street Currencies in Play, brought to you by Royal Financial Trading.